For number 4, list the account classifications that appear on the classified balance sheet. So the balance sheet, that's your accounting equation, right? We have assets on one side, liabilities on the other side, owner's equity or stockholders' equity. Since we've been focused mostly on corporate accounting, we're going to stick with the classification for the corporations. And I'll tell you the difference between a corporation and an unincorporated entity. Under assets, we have current assets. That's the first category. Current assets, anything that's cash that can be converted to cash in a year or can be expensed in a year. Second category, and I'm going to abbreviate this one, long-term investments. These are investments that management intends to hold long-term, that is greater than a year. Again, they're not going to use an operation, they're going to hold it as an investment, long-term investment. What's the next category that we just started talking about?
Intangible.
Fixed assets, right? Fixed assets, plant assets, property, plant, and equipment, it all means the same thing. These are known as your non-current operating assets. Non-current operating assets. So they're long-term assets that you use in operations. They're depreciable assets plus land. These assets get depreciated, which we're going to go over a problem in a few. The last category.
Intangible.
Yeah, intangible assets. These assets do not have a physical substance, but we know they're there. That includes patents, copyrights, trademarks, trade names, goodwill. All those are intangible assets. You don't see it. It doesn't have a physical substance, but you know they're there. On the liability side of the equation, what do we have?
Current liabilities.
Current liabilities. These liabilities, anything that's due in a year, or anything that can be recognized as revenue in a year. So that includes unearned revenue. So again, anything that's due, any liability that's due in a year, and anything that can be recognized as revenue in a year. So that includes unearned revenue. Next category. Long-term liabilities. These are liabilities that are due over a year. So a year and over. Stockholders' equity. We're going to cover this in more details next week. Stockholder equity, the basic components that's included in stockholders' equity would be what?
Retained earnings.
Retained earnings is one of them. Paid-in capital is the other one. So at the minimum, the legal requirement is for a corporation, you have to disclose the paid-in capital. That's whatever the owners put in. Their invested capital from the retained earnings. Retained earnings, that's earnings that have been retained from the owners. Retained earnings comes from the income statement. And then you subtract any dividends.